I feel like Jordan Peterson's going off the edge a bit. It's not that I disagree with him.
No, I know what you mean though. But that thing in Canada is wild.
Yeah, it's fucking mad.
Re-education camp.
It's like he's just like a boomer that discovered social media. Like he responds to reply guys with like 3 followers and like an egg profile picture.
I used to do that.
Yeah.
I used to. Daniel's like, why are you replying to these fucking idiots?
And it wasn't like once, it was for years.
Yeah, I was like, and every one of them. And I was like, why am I trying to prove every person, like just accept people are going to lie and bullshit about you? Why try and, because what it is you put something out there, you get all those replies and you're like, and you know they're wrong and you think, I'm going to correct you. I'm going to show you. And then they argue back. And then you got 84 arguments going on for a day.
Yeah, and then you just draw attention to the person that called you a D-bag or whatever it is, you know?
Yeah, and they've won because really that's what they need.
Yeah.
How much have you experienced over this last year? Because you've blown up. What are you now, like 200, 300,000 followers?
Something. I don't know. I mean, like half the people
Everyone knows.
like
290.
290.
So you must have gone through that experience.
Yeah, I mean, I don't know. I think being somewhat of like an internet native and like, I don't know, the back and forth and like the people saying bad things, good things, it's like part of it all.
Yeah.
I've actually gotten really, really familiar with the mute button. Not even block. Mute is powerful.
I prefer a block.
Yeah.
Yeah, so they'd know.
I kind of like just letting people just like toil away, just like never being noticed, but also like, you know, they can just shit talk you and say bad things in your replies every time, and you just like blissfully unaware. I don't know.
Yeah.
Then you never get the satisfaction.
I think what it is, when I get it, and I've got a lot of people muted, but when I've got somebody who's just a massive dick,
Yeah.
I'm like, I don't want other people seeing your shit.
Yeah.
I'd rather cultivate a community of decent people. Anyway, Dylan LeClair, how are you, brother?
Never been better.
Yeah.
Excited. Yeah.
How's your first bear market?
It's great. It's I mean, it's honestly, it's great. I've learned to actually love it. It's I don't know, the chaos, and I mean, everybody loves the bull market, the up only, we're gonna make it, all that. But I don't know, the bear, something with like filtering out all of the noise, all of the speculation, all of the, you know, the NFTs and all the garbage, and then being like, yeah, I'm still here. I'm here for the reason I was here 1 year ago, 2 years ago, 3 years ago, 4 years ago. I mean, I'm here for the reason that I was in high school, like pitching my friends at parties about this orange coin thing. Like that's the same reason I'm talking to you today. So it's been great.
So you got more conviction now.
Yeah, I have more conviction than ever. And like, you know, the exchange rate's just a thing, right? And it's kind of satisfying seeing, like, because I remember when Bitcoin traded to 17,000 in 2020, and like everybody was euphoric, and the chart was like looked great, and you know, it was on CNBC every single day in the news cycle. And now Bitcoin's 17,000 whatever today, and it's dead, and the thesis is broken, and all of these things, and it's just kind of funny how human psychology works.
When we made the show with Harry before this, we looked up. So I launched a podcast, I think it was November 23rd, 2017. The price on December 17th, so about just less than a month after I launched the podcast, was what?
20,000.
20,000 pretty much, yeah.
That was the top.
And then here we are 5 years later.
What Bitcoin did go sideways.
Yeah, we realized it's been a stable coin through the whole time. Do you think we bottomed?
I think the worst of the price-based capitulation is done. I think we have a painful sideways existence for some time. I don't know exactly, but for the most part, the exciting part of the bear market in terms of the volatility, the deleveraging, whatever it may be. I mean, there's potentially another catalyst or two, like Bitcoin crypto native wise, but like for the most part, we've just washed the dead bodies to the shore. And now it's like Pete Rizzo, and I've told this story a few times. He had the funniest analogy ever. I think we were on a call or we were somewhere, we were just hanging out, and he's like, this is what you don't understand. He's like, here's the analogy where you're in an alley, and you're in a dark alley and no one can see you, and two guys come and they jump you and they're just kicking the shit out of you. and beating you up, and you're just fight or flight mode, just trying to protect yourself, trying not to die. And these guys rob you to take your money, and they're just stomping you on the ground. And once it's over, and once the guy's left and they leave you in the alley, which is, the last 12 months, you got another 2 to 3 to 4 hours of just huddled. Your body's in shock. You don't know what's going on until you realize that no one's coming to get you. And you got to crawl and pick yourself up and get out of the alley and get some help and recover. And so I think we still got to crawl out of the alley here. But that's fine because, we didn't die. So
yeah, and they might be just about to come back in the alley and just punch us a couple more times.
A couple more gut punches maybe, but we'll see.
We didn't get that fucker enough. Do you remember when we were with Rizzo and he's like, were you there? He might have just been Jeremy when he said he's a cycle maximalist.
Yeah, no, I was there, yeah.
Yeah, because I was like, no, Rizzo, this time it's different. This time it's different, Rizzo. We're going to have a super cycle. It's not going to come down as much. He's like, I'm a cycle maximalist. It's going to be the same shit over and over.
Yeah, he was pretty right too. He was like, it was sometime in 2021. He's like, listen, man, like this is what's going to happen. And I don't need any data. I don't care about inflation or anything else. He's like, in 12 months time, we're going to be 70% lower. And I don't know the exact time frame, but everybody thinks this time's different and it's a super cycle. And he used to like work with Dan Held and all that. And he's like, and the super cycle thesis is hilarious because everybody's going to lever up and everybody's going to get absolutely wrecked. And then it's going to go down 70%. And we're going to do the whole same thing over again. And Rizzo was right. So I got to hand it to him.
Yeah, props Rizzo. Rizzo was right. But it's going to be different this time.
Yeah, the next one is a super cycle.
The next one is a super cycle. We're going to get out of it. So you've kind of become, it's interesting, you've become like a leading analyst. Really interesting following your Twitter over the last year. Brilliant. Congratulations.
Thank you.
I don't know how you do it. You seem to be fast on everything that's happening. You've got really good intuition. It's been a real pleasure to kind of watch what you've done. But over this year, did you have suspicions of what was coming? Did you see much of what was coming? I'm really talking about this kind of leverage contagion that's happened.
Yeah, no, I mean, I will say like in 2021, the double bubble kind of threw a wrench through like some of the analysis or some of the, like, I was surprised that we broke a new all-time high in the fall. And from there, and the Fed was still printing, and I wasn't, didn't signal the top. I didn't nail that there. But when we were around 40,000, maybe 35,000, whatever, I was actually in Europe on a boarding. I was in Prague going to Madrid as this whole Luna UST thing was popping off. And I hadn't really dug too much into Luna. I didn't really care. I'm not buying the newest Ponzi on the crypto block. I don't. But I just started to examine the mechanics of it, just to understand. Because there's a lot of Bitcoin buying. I mean, they bought 80,000 Bitcoin or whatever it was. And I started digging into mechanics, and I see as I'm in this airport, I see the UST peg break, and there's like $20 billion of stable coins in this synthetic algo stable or whatever. And I see that peg start to go to the 98 cent bound or whatever it may be. And that was like the point where once it reached 98 cents, they start to liquidate the Bitcoin. And so, I started to see like the crypto market start to tank. And I was like, well, hey guys, like first off, get out of UST. And second off, just based on, I started to look into the mechanics, like in real time. I'm on crappy Wi-Fi on my phone in this airport. I was like, I think Luna is like probably programmatically going to zero. They're just hyperinflating the supply of it. And I talked to a couple of buddies after the fact. Luna unwound to zero, but Bitcoin is still like 30K, right? Like I think it wicked to 25,000 or something and recovered a bit. And I talked to some buddies and some friends of friends, and I was like, oh wow, wait, I just kind of realized like there was tens of 10, $20 billion of stable coin promises that just evaporated. And just like, I hadn't lived through a financial crisis, but had read about a bunch of history and great financial crisis and other historical case studies. And it was like, this seems like a contagion event. So that was like, I've always had a distrust for yield products. But that was kind of the first time that I said, okay, I think there's like if you look at the yield products in crypto, right, and how they generated the yield, it was futures arbitrage, GBTC arbitrage, and then both of those disappeared in the earliest phases of the bull market. The last one that everyone kind of ponied onto was UST. So when that blew up, it was like, okay, there's some big time contagion. And so, Celsius, go down the list, right? I think was able to spot a lot of those, and really kind of like turned pretty bearish on Bitcoin crypto, like not on a long-term thesis, but just near-term, medium-term, just given the fact that there's no lender of last resort in this ecosystem. And the fact that, there's all this bad debt out there and the counterparty risk just kind of ravaged the whole thing. So, yeah, I mean, I didn't know that FTX was going to implode in June, but obviously the signs were there.
I don't think many people spotted that. No, I think they did a good job of kind of gaslighting everyone. I remember we were in Miami and we're driving around and we saw the massive Tom Brady or Giselle adverts, and they were doing their TV spots. It felt like every crypto trader on Twitter, the ones I do follow, they're all using FTX. I just assumed they were the next Binance. They just managed to somehow build a massive customer base, and you had some unique products that were doing all right. I had no idea what was going on in the background. And I know a couple of people had spotted it, but I think they caught everyone off guard.
Yeah. Funny enough, like I was, over the summer and none of like the outward facing like influencers or whatever. But it was like literally like some anon crypto, like literally like a camel and like a couple other like a cat and a few other like anonymous crypto guys that I interact with were just constantly shit posting about how SBF was a fraud and about how FTX was like a domino and all this thing. And I was like, I just kept it in the back of my mind because these guys are like very, very smart traders. They're just fantastic traders. They're not degens. They're actually very objective, bull and bear. And so I was DMing one of them and I was like, hey, like, why does Sam, because the Voyager came out and they went bankrupt, and Voyager said they released their loan book and they were like, oh yeah, one of our creditors or debtors, I'm sorry. Alameda Research owes us $370 million. And I DM this guy and I go, why does Sam have his hand in every bucket shop in this space? And he goes, you're starting to realize, huh? And he sent me a document, a screenshot of a document, and it was from 2019, and it was the Alameda Research pitch deck. And it was 15% fixed rate loans. We have one investment product, and it was slides, and it showed their performance, and it was just up only with no volatility. And if maybe Danny, if you want to show this, or if you look at like what Madoff, the like Madoffs.
I was about to say that. I was just about to say the last 2 nights we've been watching the new Netflix series about Madoff. Well, I say that. I mean, I fell asleep, but Danny's been watching it. Has it been any good?
It's pretty good so far, yeah.
Yeah, I've watched about the first 5 minutes.
But if you look at Madoff's like return, like his returns over the years, it was up only with like no downside volatility. So you outperformed the S&P every time, but he did it with no volatility to the downside. And I took that deck and I sent it around a couple times, and I said, no idea if this is real, but I suspect it's fake, because if they actually did this, because it was an Alameda pitch deck from the 2018-19 bear market, and it shows the price of Bitcoin and ETH just tanking and it went down. Bitcoin went down 80% on a ton of volatility. There's huge bear market rallies and all this, as you probably remember. Mm-hmm. And Alameda's performance was up only. And I sent it around to a couple buddies, and I was like, no idea if this is real. And I didn't want to post it to Twitter because these guys were like the titans of, the bear market. Like they were bailing everybody out, and I wasn't willing to stake my reputation on some like anon tip. But I said, if this is true, these guys are running a Ponzi. And fast forward 2 months, I'm pretty bearish on almost all crypto coins or whatever, but fast forward 2 months and the CoinDesk Alameda balance sheet gets leaked. And it was like, oh, these guys, Alameda Research, the titan hedge fund of the crypto industry, has 14 billion of assets against 8 billion in liabilities, and the assets are their own exchange token, like $7 or $8 billion of it, and a bunch of other Solana ecosystem coins with no liquidity. None of these things have liquidity, but especially FTT, it's their own exchange token, which they're the primary market maker of, and they're collateralized against it, collateralized loans. And so at that point, I was certain that FTX was, or at least Alameda was functionally insolvent. The question was whether FTX and Alameda had a relationship, which we all know how that ended. But I mean, the sad thing is like this whole thing convolutes like Bitcoin, right? Like FTX collapses because someone's running a fraudulent scam, and all of a sudden, you know, your friend is like, "Hey, dude, what's happening with Bitcoin?" And it's this realization that, and I think that, you know, there was obviously people knew that there was leverage and speculation and whatever, but that, you know, the golden, the freedom money enabled, or has enabled somewhat of like a golden age of fraud, right? In the form of blockchains and tokens and, you know, the whole ecosystem, right?
Yeah. Do you think if there'd been no Alameda, just FTX had just been its own entity, do you think it would have survived, or do you think it was just?
Well, here's the interesting thing is that, and Danny, you might be able to pull this up, is in 2019, Su Zhu,
Yeah.
Former head or co-founder of Three Arrows Capital that went bust in the whole Luna Ponzi. And these guys were like also like one of the best performers, like titans of the industry during the bull market, you know, alleged billionaires, et cetera. They published, Su Zhu published those two slides I'm referring to of the Alameda pitch deck. And he published them with like a, you know, like a thinking emoji or like a suspicious emoji. And then quote retweeted that a couple months later. And he goes, "Oh, these are the guys that are spinning up a BitMEX competitor with a new ICO, like basically because they ran out of money." If you look up maybe like Su Zhu BitMEX, you'll find that quote tweet. But it was like basically whatever Ponzi they were running to get those Bernie Madoff style returns. Well, they ran out of greater fools. So what did they do? They launched FTT from nothing. They spun it up from nothing, and they launched FTX. And then from there, you know, 2020 and the whole DeFi explosion, they basically copy and pasted Solana. There it is, right? So these guys are now trying to launch a BitMEX competitor and do an ICO for it. And the ICO is FTT. So these guys were commingling, maybe not commingling funds, but the FTX product.
No downside in bold.
Yeah.
Yeah. So this is the packages. We offer one investment product, 15% annualized fixed rate loans, no lockup. We can accept both fiat and crypto and can pay interest non-denominated in either. We can take on another 200 million in capital and achieve returns that beat traditional crypto markets. For investors with specific risk profiles, we're happy to discuss custom packages. For investments of 50 million or more, we are willing to discuss higher rates of return. These loans have no downside.
No downside.
Mean, that is
no downside in bold.
Yeah, no downside in bold. We guarantee full payment, the principal and interest, enforceable under US law and established by all parties' legal counsel. I mean, how is that enforceable? Because clearly it isn't.
It's a lie.
Okay, we're extremely confident we'll pay this full amount. In the unlikely case where we lose more than 2% over a month, we will give all investors the opportunity to recall their funds, and we still guarantee full repayment. I mean, can you imagine the conversation? They said, let's put this shit together.
Yeah, no. So I saw this in the summer and immediately was like, no, that's like a hit job, a reputational hit job. Like I'll post anything and everything. Like I've made a lot of friends, Peter, in the crypto industry. I've made a certain amount of enemies just off of my willingness to, sorry, I kicked a wire, off my willingness to just like call BS on things, whether it's, you know, crypto scams or like, you know, calling out like Celsius and Alex Mashinsky or whatever. It's like, you know, I don't really necessarily care about what people think. Like I'll stand up for what's right, but I didn't post anything about it because I was like, well, this is obviously fake. I mean, come on. Like I didn't see that Su Zhu tweet. Cause like it was so obviously a Ponzi, like no risk, no downside, all that. Like these things don't exist in capital markets. It's not a thing. And so the fact that they were able to do this, raise potentially like at least tens of millions, maybe hundreds of millions of dollars. And then once they ran out of money, launch an ICO, launch an exchange, and continue the scam for 3 more years, I think that says something about the crypto ecosystem in general. And maybe that's over. Maybe that era is done. Like the scamming, ICO, you know, perpetual motion machine, hot ball of money. But maybe it's not, you know? And like that's the whole thing with like Bitcoin being cross collateralized with all this garbage. That's like the one thing where, you know, I think it would be best if we could leave it behind. Unfortunately, you know, Bitcoin is freedom money, and it, you know, people can use it how they wish. So,
well, so we lived through 2017, the ICO bubble. I definitely bought a few ICOs. Wasn't very successful with them. Certainly towards the end of it, I remember putting 2 Bitcoin into some ICO that was like linked in on the blockchain.
yeah.
And it pretty much died before it happened. And by the time it launched, my tokens were worth, I don't know, hundreds, maybe $100. And that to me was I thought the end of it, but they've just been repackaged. The thing is, these platforms like Ethereum, they're designed to allow people to do this. So if you ask me, do we think it's done? I don't think it's done.
Yeah, I mean, Ethereum's entire purpose is to create these things.
Yeah.
Like ICOs or dApps or DeFi or all these like even like I think some of the stuff's cool, right? Like Ethereum can do a ton of things that Bitcoin cannot and will never ever be able to do by design, right? Like and the people that say like, and you know, oh, but Bitcoin DeFi is coming. Well, it's not like in the way that Ethereum has DeFi, it's not. And first off, like DeFi is in decentralized finance. It's not decentralized. It is finance like potentially, but you're using centralized stable coins. We can go down the rabbit hole of like Ethereum, the OFAC compliance stuff. I'm sure you've talked about that ad nauseum. But like Bitcoin will never be that, and that's a good thing. But Ethereum's entire shtick is like creating tokens, swapping tokens, leveraging tokens. And ultimately, what's the value of these tokens? Like who's the marginal buyer of insert blank altcoin here? There is none. You know, there is some at some points in the bull market, right? It's like assign a narrative or whatever. But like all things, these things return to their terminal value, which is zero. Which is zero, or trending forever like lower. Like look at any altcoin, or you know most every altcoin, and if it looks good, just give it some time. Look at any altcoin in Bitcoin terms, right? It's just making lower highs.
Yeah, there's something outperforming Bitcoin at the moment.
Yeah, what's that?
Monero.
Oh yeah, okay.
Yeah, but that's an interesting enough thing. Like I don't care when people say it's a shitcoin. Shut up. There's something interesting enough in the Monero, and I understand why people use it. I understand why it's built a community, but I just the only way I see this going away, Dylan, is with massive SEC enforcement on exchanges. People are. I know things like maybe Binance in jurisdictions outside the US, people will do it, but I see if you're gonna have a free market, you're gonna have a free market for scammers as well. It's just always gonna be that way. And all the crypto degens, when it picks up, they'll all come flying back in. They'll all start trading this shit again. Multi-coin capital will probably invest in a bunch of them. I mean, the thing I'd be saying is, do you think multi-coin capital are going to get out of tokens?
Well, yeah, I mean, you know, multi-coin capital is down 90% this year.
But they're above their benchmark.
Yeah, their benchmark is Solana, which is down 95%. So, you know, they're beating something. No, I like the thing with crypto, and to an extent, like this is true of Bitcoin as well. This is true of like the finance up only boom that happened post 2020. Like people believed this, like regardless of whether it was like Tesla, right, or the SPACs, or literally like pick any like ARK Invest, or like why did Bitcoin go up? It went up. Well, I mean, there was an attributed thesis to it, which I believe still to be true. And maybe, you know, we're the idiots at the table. But if you look at it, why anything went up, it went up because it had marginal flows and there was an inelasticity to its supply relative to the demand, right? So the altcoin, you know, XYZ went up 10,000% relative to Bitcoin's 300 or 500%, because there was really no one selling or transacting these tokens, and a small amount of flows pushed the exchange rate up like 1 billion%, right? So it's the same reason why like any of these financial assets outperform is just because it had marginal flows. But like when you try to sell the thing, like Alameda's tokens that spun up, it's created one of the things it created, it was called Maps. It was a
Yeah, I've read about
DeFi
it.
wallet integrated with a map application, like a literal like Apple Maps, Google Maps. It was a DeFi wallet with its own token, of course, because of course you need a token on a Maps platform. And the fully diluted value of this thing was like $10 billion. Like so all the tokens times its price. Like really? And this was like, and you know, Sam was saying all these things. It was the same everywhere. The same with Multicoin Capital or Solana. Like Solana was like a $100 billion asset. Think about $100 billion, right? And so, you know, will Multicoin exit their bags? Well, who are they selling to, right? Who's a marginal buyer of Solana for $100 million or whatever it is? And that's why FTX collapsed, because they were collateralized against something. They tried to sell it, and there's no buyers. Like you couldn't even sell $1 billion of Bitcoin right now without some pretty serious slippage. Like, and likewise, if you try to buy $1 billion of Bitcoin, like it would be quite a move.
But that is still quite impressive for Bitcoin, that there would be
buyers.
Yeah, there'd be buyers. It would be $1 billion liquidity.
Yeah.
Some of these things there just wouldn't be.
No.
Like you would end up, you would run out of buyers.
Yeah. The reason that Bitcoin never dies is because there are marginal stackers and hodlers for last resort. And some people like the legacy macro guys or whatever, like make fun of the stupid hodlers or whatever. But there's a reason why Bitcoin's crashed 90%, 85% 4 or 5 times, and it never dies. Why? And it's always a bubble. It's either a bubble or it's dead. And the Bitcoin chart in linear terms always looks like a euphoric bubble or a tragic burst. There's no in between ever.
Yeah, but I romanticize the thesis that like this is by design. This is how Bitcoin grows. That it latches onto that human emotions of fear and greed, and it just takes us through these cycles. And then maybe this was in Satoshi's design, you know, with the halving. Maybe that's within his design that he understood, because he seems to understand a lot. He understood human emotions and human trading emotions, and maybe he knew that there was no way this thing could just have gradual constant growth. It had to have these cycles, and we do these step changes. And with each step change, we bring in like 10x more people, and we lose some, but this is the only way it could grow. Maybe. I mean, I romanticize about it.
No, I whether he designed it to be that way or he just designed it and it became that. I think, yeah, you're right in the sense that I don't think it could monetize another way, right? Like Bitcoin, like there's no way it would ever appreciate like Bernie Madoff or the Alameda equity curve, right? It's never just going to go up 1% a day and then 1% and 1% and never go down.
Because if it did, people would just piling and buy more.
And then they'd leverage, you know, and they'd, you know, borrow money and do all these things and throw their life savings into it, and it would go up 200% in 4 days.
And then they would exit, it would crash. So it's almost impossible for that to happen.
Yeah. And I think that's by design. The fact that Bitcoin and is trading with relatively like low volatility now because, you know, every market maker and hedge fund and exchange and, you know, they all got wiped. But I think that sign of low volatility is almost like a sign. And maybe, yeah, could we go lower? Of course. Like if you know, equities limit down and the dollar goes to the moon and volatility explodes everywhere, then Bitcoin's going to crash for the time being. But the sign of the low volatility now, I think, is somewhat of like a sign of, and we've seen this in the past, of like relative seller exhaustion. So, I mean, maybe you play this clip in 6 months and you're like, oh, you know, seller exhaustion and Bitcoin's down 50%. Who knows, right? But like, what do you see typically with any financial asset, but with Bitcoin in you know, in the past, when Bitcoin was just like, did, you know, 3K for 6 months and everyone was like, oh my God, this thing is so boring, right? And then all of a sudden, like a few funds buy, some flows come in, and then shorts cover in what? It went to 12K in what, like a month, 2 months?
Yeah, let me ask you some of that stuff that you'll understand. You say shorts covering. Are there shorts still waiting for it to go lower?
Yeah, of course. I mean, there's shorts on, there's like, I mean, open interest, right? For every short, there's a long. And depending on collateral type and where they entered or not, they can be in or out of position. But oftentimes, like when you see, like for instance, here's an example that you'll probably remember quite well. In the middle of 2021, when you know, there was the Elon thing and the China FUD and all of that, and Bitcoin was off its high of 60,000 and it kind of muddled around 50,000 and went to 40,000. And then one afternoon, I think it was the morning on East Coast time, it went from 40,000 to 30,000 in like 25 minutes. And just like, vroom, and it was like everything was down in crypto, like 35% in a matter of like an hour. Well, like why did that happen? And it was mechanical. It was like there was a whole bunch of leveraged longs who were using Bitcoin as collateral, and they were all became forced sellers at once. And that was just because of where they purchased. And so like likewise, if you think of like literally the inverse of that, right? Like for instance, there's a whole bunch of guys on Wall Street going to CME futures and using the new Bitcoin futures ETF or even the Bitcoin short futures ETF. And they're using that to short sell Bitcoin. And that's paper denominated, right? So it's USD collateral to short Bitcoin. Like if price starts to creep up, and you need buyers for price to start to creep up, but eventually like they have to buy, they are forced buyers at some point. And so like when Bitcoin in 2019 was at 3K and it went to 6K and like it was up 25% in a day, and then it went to 6K in like a week. That was more mechanical than anything. It wasn't like there was like a flood of new buyers that doubled the market cap. It was old sellers that became forced buyers. It was short sellers covering. And so like I think that's, and we're seeing that right now with like today, Bitcoin Bitcoin miners, Coinbase, MicroStrategy, they're all up like 10, 15, 20% or something.
Yeah, what's that about? Why is that happening?
Well, they're much more liquid than Bitcoin is. Mm-hmm. And there's people shorting them. And so if you try to cover short, if you're a forced buyer into a liquid market, the price explodes. And the chart's still super ugly.
Yeah, but why today? Why suddenly all these popping?
Bitcoin's up 3% and the stock market's up 2%, and you try to cover your marathon short and there's no sellers, and you have to buy higher.
And is it covering that short, or is that some kind of like fear that this like 3% up might be a signal of the bottom? We could see higher highs, like, sorry, not higher highs, but maybe like a 10, 20% over the coming months? Or is that literally just a reaction to 3%?
Yeah, I mean, it's all relative, and these things are almost like the miners trade like derivatives of Bitcoin in a way.
Okay.
Like it's like almost like leveraged Bitcoin. Like, I mean, their operations are like Marathon is literally like they have liabilities in dollars, they produce Bitcoin. They're quite literally like leveraged Bitcoin operation. I mean, if you look at all these charts, like Marathon, Coinbase, MicroStrategy, they're still super ugly despite being up big today. Like they still look terrible.
Right.
So it's not like, if something's down 90% and goes up by 25%, like it's still down like 87% or something. Like it's not that impressive.
Yeah.
But yeah, I think that's like if this is the bottom, or when we get through the bottom, and some people are in the market for that. Some people are just passively acquiring the thing. And I respect both, right? Like, but it will be a combination of new money coming in, right? And partially that's like dollar liquidity tide type things. And it'll also be like the people that were short selling and waiting to cover, waiting for lower prices, maybe they even shorted into the lows, like they're going to cover, and there's not going to be many sellers left. Because like think about all the selling that happened over the last 12 months. Yeah. Like all of the forced selling. And like if you haven't sold Bitcoin in the last 12 months and you're a hodler, what are you going to sell for? And like, yeah, maybe it's like we go into a recession and you sell what you can because you lost your job. That's certainly an aspect of it. Maybe you are a Bitcoin and Tesla holder and Tesla went down a bunch and like you need some cash, right? Like these are all things that are going to happen at the margin, but like the brunt of the selling has happened. We're down 80%. Every firm in the space has blown up. We've had 3 exchanges blow up. Like
Dylan's calling the bottom. That's going to be the title of the show, Danny.
Bottom is in.
The bottom is in with Dylan LeClair.
Oh no.
But in quotes.
It'd be like the Willy Woo shows.
But in quotes. Fucking quotes. So what specific, like, I don't know your work structure, but you are relentless in producing content. What is it you're specifically always looking for? Or are you just dealing with whatever comes in? Yeah,
I mean, I full-time research essentially. So with Bitcoin Magazine, I just came from the HQ. We produce a research newsletter called Bitcoin Magazine Pro. That's part of my day. But more so, it's my day's not spending writing that. My day is spent kind of studying, researching what to write. Not for that specifically. Like I work with a fund. I do a couple things. Have my own company where we like consult with people on Bitcoin and Bitcoin related things. But yeah, I mean, I spend probably 8 to 10 hours a day reading and kind of looking at all this stuff. And also, like, really, I mean, a lot of increasingly as I've come to talk to more and more people in the legacy space, it's like explaining Bitcoin to boomers and like explaining like FTX imploding and like why that's not like a death knell to Bitcoin is like something that like takes time. There's a lot of nuance to these things. So like that's kind of like, you know, making a sense of this whole shitstorm is certainly part of my day.
So the boomers are still interested.
Yeah, of course.
Yeah. Okay, so yes, most of the companies that are going to blow up have blown up, but there is one important situation that's currently kind of bubbling away that people are not sure how it's going to play out. So Genesis trading and what's going on with GBTC. So we had Steve McClurgan the other day. We've talked about that with him. It's actually affected one of my sponsors. Gemini's a sponsor.
Yep.
They hold 900 million of their customer funds.
Yep.
What's your read on it all? Or let's just go back a step. Do you want to explain what GBTC is to the listener?
Sure.
And then talk about the trade that everyone was piling in, what the benefits were, why we're negative, and then let's get into the details.
Sure. So GBTC, Grayscale Bitcoin Trust, was founded in 2013, and it was maybe 2014, but it was and it trades over the counter OTC. So it was really the first thing in kind of Wall Street or legacy funds could access that was like Bitcoin exposure. So it's a closed-end trust, meaning you could bring $100 or equivalent amount of Bitcoin to Grayscale. You'd give it to them, and then they'd give you shares of GBTC, an equal amount, or at least an equal amount of net asset value in this wrapper, in this GBTC wrapper. And at first, it was locked up for 12 months, so you couldn't sell it or exchange it elsewhere over the counter. But that changed to 6 months in 2020. But this product has a built-in 2% fee forever. So whatever you hold, that net asset value, they take 2% of that, divide by 365, or like technically it's like probably divided by 252, like the amount of like Wall Street trading days, and they shave a little bit off that net asset value as a fee in perpetuity. And that's what you sign up for when you redeem shares of the trust, or not redeem, but create shares of the trust.
And the reason to buy is because you can't get direct exposure to Bitcoin. You just want somebody else to handle that exposure for you.
There's a couple of reasons. One is because Grayscale was the only product on the market for such a long time. So, for instance, it traded at a premium to net asset value for almost its entire existence. So, I told you, you bring $100 to Grayscale and they give you your GBTC shares. Well, for the longest time, for instance, if it was trading with a 20% premium, you would go to Grayscale, you'd give them $100 or $100 of Bitcoin. You'd get $120 of GBTC shares that has a net asset value of $100, but on the market, it's worth 120. So whether you were interested in the Bitcoin itself or you just were interested in the arbitrage, there was almost like this kind of ability to pick up free money for the longest time because it was the only option for Roth IRAs and Wall Street and whatever. And really, this kicked off in a big way. Like they held Bitcoin, and they held like 200,000 Bitcoin going into 2020. But post-COVID, money printer go burr. There's all these Bitcoin catalysts. Here's GBTC trading at a premium to its net asset value. This became a real popular trade on the street and for crypto funds. And so and they switched that 12-month lockup to a 6-month lockup. So a ton of funds came in, and whether they were shorting Bitcoin and buying the GBTC, or they were just outright buying, taking their Bitcoin or dollars to Grayscale to get the shares, they pummeled into this trade. And like specifically, like say at the end of the year in 2020, some funds literally would go to Grayscale like with a couple days left in the year, just to mark up their books. They'd give the $100 to Grayscale. They'd get $120 of GBTC back that they can't even move yet, and they'd mark up their year-end funds and be like, look at our net asset, or look at our performance this year, right? Because all of a sudden there's that, you say 20% performance. And so, not saying they did that with their whole fund, but there was an incentive to do so, a massive one. And so, as it turns out, right, Genesis, which is a subsidiary of Digital Currency Group, which is the owner of the Grayscale product, has a lending desk, and they were allowing all of these funds, both in TradFi and crypto, to pledge crypto assets, Bitcoin, shares of GBTC as collateral. So I could go to DCG, and the funds did this specifically, Three Arrows Capital, I believe BlockFi, although don't quote me on that, and a few other funds went to Digital Currency Group. They got shares of GBTC. They pledged them with Genesis, borrowed more money, whether in dollars or Bitcoin, went back, did it again, did it again, did it again. And so in this process, like if you think of the bull run and the catalyst, everyone thinks of Saylor, which is true. He was like preaching Bitcoin institutional kind of adoption, all this. But Saylor bought 100,000 Bitcoin. Right now he has 130,000 Bitcoin. Grayscale bought 400,000 Bitcoin from, say, the start of about 400,000 Bitcoin from the start of 2020 to when they stopped buying in February of 21. 400,000 Bitcoin. That's not like some days they literally they announced the flows and it was like 15,000 Bitcoin. They just market bought. And so when prices like we said, price set at the margin, and if there's not any sellers, right, price is going to explode. So GBTC was kind of like a quiet, biggest catalyst in the bull market, and all these funds levered up to put on this trade because it was free money. But what happened was this trade got arbitraged so hard, and people created so many GBTC shares while either shorting Bitcoin or maybe hedging, and eventually selling these shares after a 6-month lockup, that the premium that was historically always a premium, or like 99% of the time a premium, went to a discount to net asset value. And so the day that premium went to a discount, Grayscale stopped buying shares. So in February of 2021, Grayscale stopped purchasing Bitcoin, because why would you bring $100 to get $99 back in something that you can't access for 6 months and doesn't have liquidity that Bitcoin does? So there's no incentive to buy it, to create any more shares of GBTC anymore. And it's an illiquid product. And so as it turns out, not only were funds doing this, but DCG itself was going to Genesis, borrowing money and buying GBTC on the market to attempt to prop up that discount to net asset value, to get it back to flat or to a premium again.
It sounds a little bit like what Luna was doing. There's synergies in that you're trying to essentially manipulate the price.
Yeah, I mean, it's maybe not what Luna was doing. Honestly, maybe the parallels, and it's a little different, but the parallels are maybe more of like what Alameda was doing, in the sense of parent company, subsidiary that were supposedly not related to each other, using leverage and pledging their own shitcoin. And I understand that, like FTT, there was nothing backing FTT. Like legally, the Bitcoin backs the GBTC trust, the Grayscale Bitcoin Trust. But and legally, it's the shareholders that have title to the Bitcoin. The only problem is there's no redemption possibility. So if there's like Three Arrows was huge in this trade, when all this started to blow up, Three Arrows, and I think BlockFi was one of the customers, or one of the counterparties of Three Arrows. The Bitcoin exchange rate starts to go down. They have these loans from BlockFi. BlockFi is like, hey man, margin call. BlockFi starts to sell off the GBTC because like that's the collateral. But the problem is, and even Bitcoin during certain like deleveragings doesn't have all that much, like it has buy side liquidity, but if you're trying to sell like $5 billion of an asset, and that's not typical, like the exchange rate's going to go down. And so with GBTC, it does a lot less volume than Bitcoin does. And so you see during every single one of these kind of like, whether it's the Luna implosion or the FTX implosion, Bitcoin went down, but that GBTC discount went down more because there was forced sellers of this product. And as it turns out, DCG was kind of, and you can argue, like, I'm not a legal expert, but you can argue that there was sufficient disclosures or not about the company doing these things, and they really had their hands on both all of the upside catalysts in this bull market and many of the downside catalysts too.
But it seems like they didn't really need to do it. I can understand why they want to prop up the price, but it seems like if you said there's a management fee of 2% of perpetuity, even with the discount, they're still getting their 2% in perpetuity.
30 Bitcoin a day.
Yeah, I mean
30 Bitcoin a day.
They didn't need to do it.
Nope.
And I don't know what the kind of strategy behind it was, but they're trying to push against the natural market forces that's pushing that into a discount.
Yep.
It seemed like, I don't know, it seems pointless to have done it because one, it's risk.
Yep.
Not only risk for them, but risk for Genesis customers, potential legal risk.
Yep.
Why do it?
Yeah, I mean, I can't think of many other things than greed. And I'm not one to, like judge. Do what you want, but the market forces are certainly kind of. It's like there's a reckoning coming. Like just off of Bloomberg headlines, the SEC and the DOJ and all that are looking into the grayscale DCG operations. There is, and we'll see how it plays out. There is an activist campaign to redeem GBTC that's gaining plenty of traction right now.
What is that? Can you talk to me about that?
So there is organized by, in part, David Bailey, redeemgbtc.com. It's somewhat of a coalition to organize GBTC shareholders to get some form, and what capacity is yet to be known. There's not an official planned action yet, more so just a way to organize and coordinate shareholders, right? Because 600,000 Bitcoin, like billions and billions of dollars of value are locked in Hotel California with no way out, with this company that may or may not face bankruptcy, and is owes money to all these owes money to Gemini's Earn product and all these other counterparties. They have this really golden goose of an asset, which is this Grayscale Bitcoin Trust, and so trading at like price equivalent of, if Bitcoin's at 17,000 and it's trading at a 50% discount, right? Like that's Bitcoin trading at $8,500. And so like equivalent, right? So a lot of people that have bought GBTC have gotten screwed. And this is people in Roth IRAs, this is institutions, et cetera. So, the SEC, for what good reason or not, isn't allowing an ETF, which an ETF would fix these flaws, right? Because in ETF, every dollar of buying pressure, every dollar of selling pressure is a dollar of Bitcoin that's acquired or sold, which is not what happens today. The Grayscale, no Bitcoin can leave that vault. So Redeem GBTC is we'll see if it's successful, but it's certainly gaining plenty of steam. I know firsthand there are big boy institutions that are getting involved. So we'll see what happens. I'm no legal expert, but I think there's certainly more so than ever, there's a risk of not a risk, but it would certainly be a tragedy if I was Barry Silbert, and I don't know him. I have nothing against him, but he, it would be the fumble of a century to lose that cash cow.
Well, we brought this up the other day. We were talking about how one of the most interesting parts of this kind of bear market cycle, and the number of the people who are either billionaires or believed to be billionaires and to be believed to be some of the most successful people in the industry, have taken ridiculous risks, not only with their own capital, other people's capital, reputation. Some are certainly risking jail time. I mean, I've also seen Mashinsky's being sued by the New York AG, but so many people with great certainly credible reputations.
Yep.
I mean, if you're Barry, maybe some of the Bitcoin maxis don't like you.
Yeah.
But like good reputations and serious amounts of money,
Yep.
and they've taken this massive risk and they've wrecked themselves, wrecked other people's, wrecked their reputation, wrecked their career, and potentially facing jail. I just don't understand. I mean, I was talking to Danny saying, look, if we could take this, with the podcast, if we could take this big risk, and we might be able to 10x our money, but if we fuck it up, we're going to be wrecked and in jail. We wouldn't do it. We're not fucking more. So I don't understand why these people have done it. I don't understand, Dylan.
Yeah. I mean, like if you just look on public Twitter, Barry was in February was bragging about buying tens of millions of $50 million, $100 million of Zcash, right? Which is like a bottom tier shit coin.
Yep.
So like, again, like I don't like relish in the success or failures of others, but like it's certainly like, at some point, you pay the piper. And it's interesting that, yeah, I agree. Like so many people had the world and lost it all. I mean, Peter, I do ponder though, like, and we're both sitting here. We're both surviving. We both didn't lose all of our Bitcoin. At least I can't speak for you, but
No, I'm good.
You're good.
I mean, look, it's I've accumulated, and certainly I'm under. Like, if you consider, I'm certainly underwater on some of it. I've been accumulating since Bitcoin was at.
But you're not zeroed.
No, not at all.
No. So, but I do wonder, not wonder, but like, I try to be a little empathetic and like, okay, if I was on the cover of, not on the cover of Forbes, but like if I was like, this hotshot billionaire, and if you just look at some of the stuff that was happening in the bull market, like Three Arrows Capital was borrowing hundreds of millions of dollars unsecured, no collateral, just an IOU. Like, maybe that, maybe it was tempting to them. Like I certainly think I would have been a little more prudent in those shoes, but who knows? I mean, it's pretty mind-boggling how many zeros there are. And Forbes, if you look at the recent Forbes list of crypto billionaires, they marked Barry as a zero.
Did they really?
Yeah, if you look up, I think they published it on December 24th. If you look up Forbes crypto billionaire list, it says Barry Silbert X billion to now zero.
Holy shit.
Yeah. So, and I mean, that's an estimate, but when you can't pay your loans, I mean, yeah.
Yeah. I mean, actually lending to people unsecured is crazy.
Yeah. It's nonsensical.
Yeah. I mean, borrowing unsecured is tempting, but
yeah.
I take limited risks in my life
with
regards to Bitcoin and what we do for work and my football team and my house. Like, I take limited risks. I say all that, Dylan. In 2017, I traded up from 25K pounds, so $32,000 to over $1 million, and then back down to like under 200K in this matter of months. And then with the tax bill, I had to sell off a lump of Bitcoin. Like, I went through a situation like that, but then I wasn't leveraging other people's money.
Yeah.
It was my own risk, but I don't know, man. I just look and try and think what's going on in your mind. But then I'm trying to, when they realize they're fucked, when they realize, holy shit, this has gone bad. Maybe do you know what it is? Maybe everyone bought the Kool-Aid. Like, we're going 100K, we're going 150K, we're going 200K. And we didn't get, if you're honest, we didn't get near it.
Yeah. Well, I mean, I will say, like, I certainly...
I bought the Kool-Aid.
Yeah. No, I drank the Kool-Aid and not by the way, but it's much easier to manage. And, if you're trading or not, or, managing capital or not, it's a lot harder to manage 9 figures, 10-figure positions than it is to manage 5, 6, 7, even 8-figure positions, right?
Yeah. Look at Jeb McCaleb. He's only down 0.1 billion, 2.5 to 2.4.
I don't know where they're coming up with those numbers, but I mean, the CZ numbers aren't real either.
Cameron and Tyler, that's a big drop. Brian Armstrong. I mean, but Brian's is slightly different. His drop is just it's a cycle drop, right? Most of these people are cycle drops. I mean,
he has equity in a business.
Yeah, I mean, and then in the next cycle, that 1.5 could become 15 billion.
Yeah.
Fucking hell, CZ 65 billion to 4.5.
That 65 is just wrong. It's just not.
Sam needs to be a minus.
Yeah.
Are you on there, Danny? I mean, look, that's crazy.
Yeah,
that's crazy. Do you think what role can leverage play in these markets sensibly?
Like in the future?
Yeah.
Yeah. I mean, I kind of think, and this is when kind of ties to like what people say, like Bitcoin is an uncorrelated thing, blah, blah, like, Bitcoin needs to decouple from equities or whatever. I say the opposite. I'm like, no, if you want Bitcoin to win, like if Bitcoin is to become this like global, whether it's a global reserve currency or you don't even have to get that far. Bitcoin is like a $10 trillion asset, right? 50 trillion, 5 trillion, 2 trillion, like whatever it is. If you want Bitcoin to entrench itself on the asset side of the balance sheet around the world, it's going to be correlated to global equities. It's going to be correlated to the dollar. It's going to, like, that's just the reality of these things. Like, if you look at financial...
Why?
Well, like, so if you look at
Like, I don't get any of this shit, Dylan. Like, you look at... You use language and you talk about marginal buyers and you talk about like all these different... and it's natural to you.
Yeah.
It isn't someone like me. So there's other people listening I know who'll feel the same.
Okay.
Why? Like, why is it
Yeah.
correlated?
Yeah. So in the current system of fiat money, of government-backed money, it's money is created through debt. So money supply is created through debt, and it's actually canceled or destroyed when the debt is repaid or defaulted upon. So the reason that you get these business cycles, or the reason you get these credit cycle booms, whether it's like tech stocks or housing in '08 or just never mind like the business cycles, but the reason that when in '08 when the mortgages are going bad and something completely unrelated to subprime is crashing, that's because it's all like the money supply, the assets, the global balance sheet it's all tied together. So you have assets and liabilities. If your asset side is falling and the liabilities need to be paid, you sell your assets to pay the liabilities. And so in that sense, everything, and maybe that's a bad explanation.
That's good.
But for that reason, most all assets in a way are correlated, or at least not correlated, interrelated. In the sense, it's all based on the credit-based system of the dollar, or not the dollar, but whatever fiat currency, of which the dollar is a dominant majority. So when you have global equity or global stocks falling, right? The reason that like Bitcoin was traded like almost 1-in-1 with the NASDAQ was because a lot of the people that own Bitcoin this year or the last couple of years also own tech stocks. They also own equities. They also own, I was going to say housing, but housing doesn't trade on a day-to-day market. And so, or even just basic math, right? Bitcoin, what is Bitcoin's exchange rate? BTC/USD, not the numerator is Bitcoin, the denominator is the dollar. So what happens when stocks are selling off, right? Or what happens like, the dollar wrecking ball? What does that mean? It means the dollar is appreciating against other things, specifically other currencies. But when you see the dollar up big on a day, you see equities down. You also see Bitcoin down. Why? Well, the denominator of this fraction is increasing. So the value of this math equation, BTC divided by USD, is decreasing, right? So in that sense, like I think when someone's like, oh, Bitcoin shouldn't be correlated or it's uncorrelated, it's like, well, I kind of view Bitcoin as like, I want it to entrench itself on the balance sheet of the world. And for that reason, I want it to be correlated to these things. Because if 5 billion people own Bitcoin, and if the biggest Wall Street institutions and all the public companies have Bitcoin, like if that's the vision of Bitcoin as Bitcoin's exceeding, Bitcoin's a world reserve currency or world reserve asset or whatever, then it will be correlated to global risk assets. It will be correlated to the dollar and these other things. And maybe there's that utopian vision of like, it's going to supersede all those things and it's going to get rid of the dollar. But like there's a big journey in between that phase. And it won't be just like doing its own thing through that transition.
On the way to that though, does wide scale like usage of Bitcoin not change that? Because if you're getting paid in Bitcoin or if you're paying your mortgage in Bitcoin, like it doesn't matter if the Fed's tightening or if they're printing money, someone's buying it at that time.
That's a great question. I think it's more so the fact that in this dollar credit-based system, like there's at this point now, aside from a few examples of like maybe crypto hedge funds or like a Genesis trading or whatever, no one no one has liabilities in Bitcoin. So I mean, maybe if Danny asked you, Peter, hey, I want my salary denominated in Bitcoin terms, then that would mean that you are short Bitcoin. You are short a stream of Bitcoin over the next 12 months or whatever his salary is. But no one does that, at least now, like, right? Or at least not in scale. But there is a massive global short position for dollars, right? So when the dollar is appreciating a bunch, essentially that's just a short squeeze on the currency. So when everything's selling off, it's just like people understand what happened with GameStop, right? It's a short squeeze. We're gonna force the hedge funds to cover. Well, like everybody's short dollars, right? Because if you have student loans, if you have a mortgage, well, I guess you're short pounds, right? But if you are, have any sort of debt, right? The U.S. government is short $30 trillion. They are short $30 trillion. So in that sense, that's the reason why things are correlated. And even so, even if Bitcoin, has all of this native adoption and organic use, the real driver of all of this globally is the $100 trillion of forced buying of dollars, because you're short dollars. It's dollar liabilities. And so that's why, more or less, not it's all one trade, because things will outperform and things will underperform. But, in the interim, if you just watch stocks, Bitcoin, the dollar, bonds, you'll see they'll move tick for tick, right? You'll see on the second, the minute, the hour, a lot of these things move in tandem. And that's because they're all sharing liquidity. If that makes sense.
Yeah, no, it does. But if we were to get to a point where you talk about every company having Bitcoin on its balance sheet, there was a massive amount of adoption to support that, it can't be correlated through that. Is it only correlated at a time where liquidity is low?
Yeah, I mean, so I think there'll be periods of maybe like
Every 4 years.
Yeah, the maybe periods of the the off-sided decoupling.
Yeah.
But like I think, and whether that's like there was times during the second double bubble in 2021 where like stocks were down, the dollar was up, volatility was kind of going up, and Bitcoin was up like 11%, and it was like, whoa, like
We've decoupled.
like there's there's like I don't know who's, and now we know that it was Alameda taking their customer money and raising fraudulent venture money and pummeling like the day of the bottom in 2021, like Bitcoin flirting around 29K, it dropped below 30K, and people were like, oh no, like it's finally gonna go lower. And then the stamp of the bottom, Alameda raised FTX raised $800 million, and it was like boom, and then we started going up only again, and it was like, oh well, now in hindsight, it was like they were just pummeling money on their own exchange, leveraging it, buying Solana and shitcoins and Bitcoin and all this other stuff. And so like we, quote unquote decoupled. I think like there will be time again in the future where there's whether it's an idiosyncratic catalyst or, the Saudis or any of these like oft-cited narratives of like, who are the buyers coming in? Like I do believe that most people that haven't bought Bitcoin yet, at some point in the next 10 years, will own some. And there's not that many sellers. There's probably a couple million Bitcoin out there that are going to be parted with. That's one of the beauties of the bear market, is all of the psychos that that yell at you on Twitter, they buy it all.
Yeah.
Right. That's one of the best parts about this cleansing process. But it takes time. And like the big boys, the Paul Tudor Jones, the Druckenmillers of the world, they'll come back. But they're not dogmatic. They're not religious. And when they come, they'll bring billions of dollars.
What can you tell me about Silvergate from your side? And just like to know, I know the company well. I speak to Alan occasionally.
Yeah.
I've seen their press releases this week, but I know you've been tracking it.
Yeah. I mean, I don't there's certainly there's like a ton of allegations and whatnot. I mean, just based on like banking regulations and whatever, the whole FTX thing was a real big black eye. Basically, Silvergate was like one of the only two banks, Silvergate and Signature, are the only like two of the banks that basically deal with crypto companies at scale in the US. There's really tight regulations because of all of the stuff that happens in crypto. Most banks don't want to touch it, rightfully so or not. Silvergate comes out with a SEN network, SEN, that basically allows crypto companies to settle dollars between each other on banking rails. Like, so the stable coins exist, but it's almost like a walled garden, right? Like if you want to get the money out, you have to go to like Tether's bank or, USDC, and it's this whole process. But if I can just like have money on a bank, like as a Coinbase or as a Circle or as a Marathon or any of these, like as a Gemini, if you just look up Silvergate banking regulations on Google Images, there's like these images of like all of these crypto companies, like some of the most notable in the space, and they're all connected. And in the middle, it's like SEN network, right? So essentially what that did was that gave Silvergate all of these dollar denominated deposits. And as a bank, like as a fractional reserve bank, a Fed member bank, they can lend that money out, right? And so that's the banking model today. And the post FTX, it comes out that, Alameda was laundering all this money. FTX users who it was funny that this didn't come out beforehand, but like if you wanted to wire money into FTX, you literally sent it to the Alameda bank account. Like a lot of red flags, like in hindsight, we're like, wait, what?
Hold on a second.
And so because of that, because of all of the FTX thing, there was a ton of people have pulled their deposits from Silvergate. And as a bank, the last thing you want to do is have a run on your deposits. And so because of that, they've had a run on deposits. And what did they do? They had to sell a bunch of their portfolio to get liquid. And they had a bunch of debt securities. And if what happened in the bond market over the last year, bonds went down 25%. So they had to sell a bunch of bonds at a loss. And so that's why, the share price has been pummeled. It's down 90% from the highs. It's down 70 something percent since FTX collapsed. And so, yeah, I've full disclosure, like I was short the stock, not anymore, but, more so just as a play.
Good trade for you.
Yeah.
Look, I like those guys. I've been over there a couple of times. And I feel like everything I've read, they've managed to survive it and ride it out.
Yep.
I've seen did you see the press release this week?
When their stock went down 40% in a day?
No. They did a press release in relation to, I think they've let some of their team go.
Oh.
And in terms of like recapitalizing the business. But I kind of feel sorry for them in some ways because I do feel like they're an honest player in the market that's trying to support crypto companies, Bitcoin companies, whatever.
Yeah.
And we need that. Banking has always been a challenge for these companies, and they've gone out and they've provided the products.
Yep.
They don't feel like a crypto company when you visit them. They feel like a bank.
Yeah.
And I feel like they're an honest player. So I want them to survive and work it out. And so it's good to hear your analysis on that. Okay, before we go off and get some chicken, looking ahead to this year, what are you looking at? What are you most excited about?
I'm interested to see how 2023 plays out in the legacy system. I think last time we talked, it was a little bit dark, and it was less about the crypto and more about like the macro stuff.
Yeah.
And it was certainly kind of a wild year, biggest fixed income sell-off ever. I think we met like just after Ukraine's invasion. I forget some of the particulars, but I think we had a pretty good convo that was like direct.
A bit doomy.
Yeah, like I think
it was a reality check, right?
Yeah, it was a reality check. I don't know if 2023 is as doomy, but I think certainly a lot of people are conditioned, not so much in Bitcoin. Like I think people in Bitcoin and crypto are used to getting kicked in the teeth. But like in legacy world or just in, investing in general, people have been conditioned. And I say this, like I recognize, I have full awareness that I say this as a 21-year-old. Like not that I'm some like, wise old sire that has seen 60 years of market cycles, but like it seems that people are very conditioned of, from the up only QE era of, stocks only go up. Like a slight recession or a slight downturn in equities or bonds or whatever, like the Fed's going to step in. Everything's going to be fine. And the maybe regime change that we saw in 2021 or 2022 in terms of inflation finally showing up, we can't print unlimited money and have no implications anymore. That's not great for financial assets. And now, the recession, like one of the things I was actually wrong about, many things, but in 2022 was I thought the recession was going to come faster. But, surprisingly resilient economy. And so I still think that there's some pretty big headwinds in terms of like, whether you want to think of it as like a liquidity perspective or just like a business cycle perspective. Like I was telling a couple people on Twitter, like, and this is just my opinion, but like people are like, oh, this has to be max pain. I was like, man, respectfully, like max pain is not your investment portfolio goes down. Max pain is like you lose your job and you can't make your mortgage payment.
And you can't find a new job.
And you can't find a new job.
Yeah.
Right? Like that's max pain.
Look, there are certainly people in the UK, and that's my lens for living there, who are living through max pain. But the max pains really hit the working class most of all, because these are the people whose energy bills have shot up and they can't afford to pay their energy bills, or they can't afford to pay the energy bills for their. Actually, I think the UK government just announced today they're going to
did.
subsidize.
Energy stimmies, yeah.
Yeah, and how much are they doing?
5.5 billion, I think.
Yeah, and they
Yeah.
have to do that
Yeah.
because if they don't, companies are going to close because these companies cannot afford to keep their business open.
Yeah.
There is certainly pain coming, and sorry, there's certainly pain being existed, but that's, I say work into middle class. I mean, I know people who are saying, yeah, I just don't put my heating on in the evening now. I've got a hot water bottle and a blanket. I can't fucking afford to do it. And if they're getting squeezed there, it means they're getting squeezed everywhere.
Yep.
So there are certain people feeling pain. I think there are others who haven't yet seen it.
Yeah. No, and like I'm not calling for like economic Armageddon in a way, but I just think like if you think about a lot of the conditions that persisted over the last, you could say 10 years, you could say 20 years, you could even say 40 years of like, okay, we have like this, unipolar world order, like geopolitics in an investment sense meant nothing. It was just like kind of smooth sailing. Like, yeah, the US kind of like imperialist went over to the Middle East, but like, everyone just didn't really care and like everything was great. Like that sounds like kind of messed up, but like now we kind of see a lot of these big forces in terms of like Russia, China, kind of like challenging the hegemon. Like I'm no geopolitical strategist. I don't know how to quantify these things, but like there's a tail risk of like Xi invading Taiwan. Like certainly smart people have paid attention to this. There's a war going on, like basically on the European continent with the biggest commodity producer in the world. Like all of these things, the U.S. is draining its SPR to stave off the inflationary pressures, maybe ahead of a hot war conflict. Like all of these things are like, that's not great. You have Germany. You have Germany and the European nations, the UK, that are facing this massive cost of energy increase. And what are they doing? They're like, oh, we're just going to go issue more debt, right? And like, and the central banks are like, yeah, we're going to taper our balance sheet and stop buying debt. And so what did the bond market do? The yields soar up and bonds sell off. And it's like, okay, yeah, if you want to issue more debt, like what happened with the gilt market and the pound earlier this year was like, okay, we're going to cut taxes at the same time as we subsidize all the energy bills. And the gilt market, like UK bonds just absolutely tanked, yields soared and the pound crashed. And they're like, okay, whoa, like we're not going to do that. And they scrapped the government for like the second time, like total mess, right?
Yeah, total mess.
So, I mean, do I know exactly what's coming? No, I don't. But I expect turbulence, I guess is what I'll say.
What are you optimistic about?
Yeah, that's what you asked me, and I went completely doom
No,
around
I
you.
said what you're looking forward to,
Okay.
but like looking forward to is more like what you're looking at. But like, what is there to be optimistic about?
Yeah, I mean, I'm
Nothing. We're fucked.
Yeah, no, I mean, I think aside from like exchange rate, like the reason I'm talking on a show is what Bitcoin did. The reason I work for a Bitcoin company, the reason I log on to the Bird app every day and talk about this orange coin is because I'm optimistic about a future that we have control of our own property, our own money. It's we're not ruled by tyrants and not in the U.S., but there's dictators all over the world. There's kind of an overruling elite class of people that kind of pull the triggers of the world, and so I'm optimistic about Bitcoin despite its exchange rate volatility, despite all the financial jargon BS. Because I think it's really one of the only chances we have, in my lifetime, in our lifetime, to, or really ever maybe. There's that old shiny metal that people like, but in terms of like an engineering solution, a tech solution to this kind of Orwellian future. That's one of the things that's why I, through the up and downs, like that's why I'm like actually really passionate about Bitcoin. Like the money's fun. Like I love finance because I love math and I love the challenge. So I'll talk about the GBTCs and Silvergates of the world, and that's fascinating to me. But like, is that what like gets me up in the morning? Like I guess, but not really. Like what really drives me, and what really is like I'm passionate about this thing is because I think there's like probably our only shot at global money that's not ruled by people. So that's
Love it.
Yeah.
Well, listen, dude, it's been great to get to know you over this last couple of years and just see you blow up and everything you've done with your career. It's great to meet your parents in Miami. That was awesome. And we got saxophone in. Did you say we had a saxophone?
A saxophone?
Do you play the sax?
I do.
You don't remember that?
I don't remember.
Yeah.
Next time.
Do you remember us playing that?
No.
You still playing it?
I actually touched it for the first time like last month, but I don't actively play the sax
We
anymore.
should get you to bring it next time because we have Junseth in every time singing for us.
We need you on the sax, Junseth singing, and Troy Cross playing piano.
Yeah, we
boy.
could start a band.
Yeah.
No, listen, dude, congratulations on everything. You've obviously got a good work ethic, and it's been really impressive to see what you've done. It's great to get to know you. Just continue crushing it, man. And where do you want to send people?
Yeah. First off, I mean, I appreciate you having me on.
Anytime, dude. You got a permanent open invite. If you ever message me or Danny, you go, I want to come on. It's like dinner's in.
Love it. Yeah, you can just find me on Twitter probably. I do all sorts of things, like I said at the beginning, at Dylan LeClair _. That's where I'm at mostly. Work for Bitcoin Magazine, do a couple other things. But yeah, reach out to me there.
All right, thank you, man. All right, take care. Let's go
Cheers.
and get some chicken.
Cheers, Peter.